Trent nosedives in early trade following what was a muted second quarter. Reported EBITDA stood at 26.5%, but like-to-like EBITDA grew 14%. Soft revenue and profit growth trigger multiple downgrades and target price cuts. The stock topped Nifty loser.
A 37% year-on-year growth in profit coupled with a sharp expansion in margins sends the shares of Nalco higher. The government-owned company also declared an interim dividend of around 4 rupees per share.
Strong second quarter results fuel an upmove in Nykaa. Steady 30% upmove pushes gross merchandise value to a 6-quarter high. Profit more than doubles while EBITDA margin is the highest since the IPO.
Steady show coming in domestic businesses aids a double-digit growth for Torrent Pharma. Profit up close to around 30% year-on-year. US and India growth lift revenue by around 14%. The stock is up 6%.
Lenskart sees a muted debut on the bourses, lists at a 2% discount, declines, but thereafter sees a recovery, now currently at the issue price of 402 rupees per share on the NSE.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me as always is Mangala Malu. Well, we've got plenty of numbers that are coming in thick and fast, and one of those numbers that looked absolutely rocking was actually Welspun Corp. The company reported a solid set of earnings in the September quarter. Revenues are up more than 30%, profitability jumped up more than 50%. And to help us with the past quarter and the way ahead, we're joined by Mr. Vipul Mathur, the MD and CEO at Welspun Corp. Hi, Mr. Mathur. Good morning. Thanks a lot for coming down to the studio.
Good morning, Nigel.
Well, congratulations on a good showing, with regard to your numbers. But my question is with regard to your guidance. Why are you being so conservative? As per your reported numbers at the half-year mark, you're around 1,200 crores. And for the year, you're guiding for around 2,200 crores. If I go past all the last many years, second half is much better than first half. So realistically, should it be actually 2,500 crores of EBITDA for this year itself?
So, Nigel, first half has been good.
Yes.
Second half looks extremely promising.
Got it.
It is going to be a strong performance coming up in Q3 and Q4. I think so. The reason we are slightly conservative in terms of guidance, that do I have a worry that we will not exceed it? No, I don't think so. We will definitely be exceeding that. But the reason we have always been slightly conservative because see, there are a lot many variables into play. Delivery at the customer side, payments, this, that, all the there's quite a few things which are out there. So which holds us back slightly in terms of overcommitting. See, we always believe in committing and performing and delivering.
So you are comfortable of beating that guidance. You're sure about that, but you don't want to just immediately promise the street because you believe that there could be some unforeseen circumstances. X of that unforeseen circumstances, which none of us know about, going by purely the historic run rate, etc., 2,500 crores should be possible, right?
I don't want to put a number to that, but definitely we would definitely be beating the estimate. There's no doubt about that.
Okay, all right. Let's focus then on the thought process. Because suddenly Welspun Corp, I remember a few years ago, there was a big debt in books, business wasn't picking up, single trick pony, dependent only on the US business. Now what's happened is the US business is firing. And then you have support from Saudi as well as from India. My question is on the capex. What 5,000-6,000 crores of capex, majority of it is in the US as well as in Saudi. Tell us about demand trends. And once this capacity comes on stream, do you believe demand is very, very strong? And if you could put in, a number, are return ratios better in the US and Saudi in comparison to what you have done in the past?
So, Nigel, we did a sort of a strategic exercise a couple of years back, and we clearly came up with a theme that we will be investing monies into core products and core geographies. For us, core product is pipe. Core geographies are India, Saudi Arabia, and US.
Yes.
I think so that decision which we took around 3 years back, we are absolutely walking the talk onto that. And accordingly, we have made the investments in Saudi as well as US. And now you see the things turning around. One thing is very clear that the industry is in a different mode altogether at this point in time. At one point in time, everyone was saying energy, fuel, fossil fuel is history. That's not the case anymore. You see any report which is coming out from Exxon, Chevron to Totals of the world, they're all saying, at least for our lifetime, the fossil fuels are going to be there.
And Trump is saying drill, baby, drill.
And Trump, in any case, is saying he is further accelerating the whole process. So we are at the right place at the right time, and with the right credibility and the right sort of situation. We are one of the largest players in America at this point in time, almost having a 30% market share. So who will invest other than us? So that's the leverage we are taking. And I think so that investments, what we have done, either in Saudi or in US, I think so. And as they will come on to stream, one will come up in FY26, the other will come up largely around FY27. For the next 2 years, when these two businesses will come on stream, you will see a sort of an exponential growth coming in there.
And do you give us a sense on what that exponential growth implies in terms of quantifiable targets?
Yeah, and return ratios, how is it better compared to what you have done in the past?
At the end of the day, everything will boil down to, let's say, what is the EBITDA margins we are making, right? What is the sort of a growth we are showing, and what is the ROCE we are delivering?
All those are the targets that we are asking you.
So we have already been very clear about that we are targeting a ROCE of more than 20%. Right now, if you look at it, we are already around 22%.
Yep.
Once these two things will start coming up, they are only going to improve from there.
Right.
Okay. So ROCE moves up further from here, right?
Absolutely.
All right. The new buzzword is data center. And it seems indirectly, suddenly there is some exposure for Welspun Corp, because one of the large clients, they are going to be setting up capacity, which ultimately will require some of what you produce. So tell us, how big is this data center opportunity for Welspun Corp in the United States? Because the last client gave you a big order, and that was in the direction of data center itself.
So there is a sort of a paradigm shift which is happening. Earlier, what was happening? People were drilling in the Permian. They were exporting all the gas to the Gulf Coast, and that was being, that LNG was being shipped all over the world. I think so. The way data centers are coming up, they have a massive power requirement. Now, the power requirement could have been handled through the grid. They have the grid connectivity and the grid stability in the US is falling short of expectation at this point in time. So, and data centers are absolutely energy hungry, assets. So what they are trying to do, they are trying to power themselves on their own. So they are setting up a captive power plant beside the data center, and those power plants are now being fueled by the gas.
And to transport the gas, they require
for transport the gas, these midstream companies are putting up this pipeline. So earlier, these midstream companies were all going towards the Gulf Coast. Now these midstream companies are going towards the Gulf Coast as well as to the data center.
Okay, what is the
total addressable market here?
See, early days, but the fact remains, more than the addressable market, what we need to see is that the type of players which are coming into play. The types of Metas and of all those people, that the high quality asset people are coming into the data centers, and they are setting up massive, they were doing a massive investments. So we are a part of a value chain. Earlier, data center versus chips. Now you are a part of the value chain, is a pipeline.
Yeah.
So we are now sitting into that particular value chain.
Got that. So, we'll get to that opportunity as and when we start seeing that in the numbers and orders, etc. Finally, a couple of questions from an India standpoint. One is Sensex, 650 crore, just wanted to know what is the path to break even here and what's the scalability here. And the second one is on Welspun specialty, business. You had said that you incubated it, turned it into a black from red. They at some point, merge it with you. So on Sensex, profitability and Welspun.
So on Sensex, see, as I have always said, it's a work in progress at Sensex. It's fundamentally a very, very strong brand. It's a pan-India brand. Today, you go on street and you ask anyone, Sensex, it's a national iconic brand. You see, it is taking its own time. There's no doubt about it. I wish it could have been a little better. But, there have been challenges into the industry. We have seen some sort of infrastructure, capex or money flowing from the government into the water sector, into infrastructure over the last 1 or 2 quarters have gone slow, which I believe that should be okay now. Once that happens, the things will change at Sensex. More importantly, I think so what we are trying to do is we are creating a very, very strong base out there. So we are not, it's a long haul. We are seeing, we don't want to expedite things, recklessly. We want to do everything which is absolutely correct in terms of, let's say, who are my dealers, who are my distributors, who are my influencers. All those stuff, all these cleanup and hygiene factors are currently going on.
So basically, Sensex is still in that growing mode. Don't expect exponential growth in the near term. You're building the blocks. So we got that out of the way. What about Welspun Specialty? Will you look to fold it in? That business has turned around. You'll have taken a larger chunk as well. Very quickly, sir.
So Welspun Specialty is not, we do not intend to do that at this point in time. We want to incubate it. I think so there's a huge potential in that company.
Yes.
And I'm very, very sure that in quarters to come, you will see a sort of a significant growth into that.
All right, Mr. Mathur, always a pleasure talking to you, sir. You're sounding optimistic about business, and we'll track you to some of these numbers. But wish you well, and we look forward to chatting up at the end of the next quarter.
Promise about growth coming in quarters to come. We'll obviously have you join us every quarter and then detail where the growth.
It's always a pleasure, man.
And the street likes what you have said. I think the stock has recovered from the day's low. It's currently moved to the high point of the day as we speak. Take a break, come back. The management of Hindalco is waiting for us. They'll detail their numbers. Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, let's shift focus to another earnings conversation. We have Hindalco, which reported a good growth in revenue, 20% jump in profitability as well for the September quarter. I spoke to the MD, Mr. Satish Pai, and started off by asking him about the pricing band for aluminium and also their hedging strategy. Let's listen in to what he had to say.
A normal hedging strategy is about 20 to 25%. But as we come closer to the quarter, like what we saw now, and as you said, the LME is reaching all-time highs, we started to add on to actually lock in the gains for Q4. So whereas you see the 49% at an average of 2750, the last amount, let's say the last 10 or 15% hedges have been at that 2900 and above. The average then comes down to the 2750. So we took advantage of the very high LME prices to add to our hedge positions for Q3 and Q4. Otherwise, our hedging strategy does not change. Generally, we do only about 20 to 25%.
Okay, got it. Also, if you could help us out with regard to the EBITDA per ton for the India business. That's been looking beautiful, rock solid, so to call it. Do you expect the aluminium EBITDA per ton to continue around the similar levels that you've seen in the past quarter? And what about copper? In the past, we've been talking about this ballpark 600, 650 crores per quarter. Stick to that?
So as I think even last quarter when we discussed, as I said, if the LME stays above the 2,800 that we have been seeing, the EBITDA per ton will be at that $1,500, which is what we are running at right now. Now, why Q2 is more remarkable is because it was a monsoon quarter. And during a monsoon quarter, generally coal availability, coal costs go up compared to Q1. But in spite of that, our plants delivered a very stable and excellent operational performance. And which is why even in a monsoon quarter, we delivered 1,500 plus EBITDA per ton. Now, coming to copper, as you know, TCRCs are low. We have been guiding that because of our varied value chain in copper, we will be delivering 600 crores plus, and we are maintaining that and will continue to do that.
Got it. Just to close the loop then on the India business, you have announced the expansion at the Aditya unit, and I think that will reach full capacity. Now all eyes are on Mahan because I think you have scope to double capacity out there. Are there plans to go ahead and announce, a capacity expansion? Because the India business suddenly is looking very, very rock solid, since that's a direct play on aluminium.
You're absolutely right. And we, of course, have plans to do the next phase of expansion in Mahan. It's just that the timing is what we are going to look at. We are preparing the background work. You see, Aditya, we are doubling capacity from 360 to 720. And that's the projects that are ongoing now. Probably we'll be announcing Mahan sometime next year.
Got it. Explain to us the Novelis capex then, Mr. Pai. What went so wrong? From the time you'll have announced it, the capex now is close to double of that. In the middle as well, you'll have gone ahead and increased it. So the street said, okay, cost could have gone up. But now it's up another 20% from the last announced capex number. Explain to us, what went wrong? And is there scope for this capex to even go higher from here on? Because the return ratios now have come down to mid-single digits.
So let me make a few important points on our Bay Minette project. So Bay Minette is providing us 600,000 tons with the capacity to go to 1.2 million tons of rolling capacity in the US. The US is the largest market. Because of the tariff environment, anybody trying to import into the US faces a lot of hurdles. So we think that this project is going to be highly accretive to Novelis going forward. The second point on the capex itself is that it is a very complex project. There is a high inflationary environment in the US now. So more than 50% of that increase is due to cost inflations that are going on today. So I think that overall, when you look at it, the US is a great market. The demand is good. We will have, of course, pricing strengths because we'll have capacity in the US. So we think overall, this project will be good. And most important, we will be delivering higher than the cost of capital for Novelis on this project.
Interesting. But what about, if you could give us an ROC number? Earlier, I mean, you were estimating, I think, low double digits. Now it will be likely 6 to 7%?
No, it will be high single digits.
It'll be high single digits. Got it. On this expansion, the ROC will be high single digits. Got that. Given the expansion that are going to be taken at Aditya, in addition to this Novelis cost escalation that we've seen, the net debt to EBITDA that was well behaved for the last many quarters, that could perk up, right? Where do you see the net debt to EBITDA peak out? And also, if you could tell us the absolute debt number, what will it look like?
So look, I think that the India business at these current LMEs is going to be at a negative net debt to EBITDA for the next few years. So at the console level, we committed to the street that we will never cross 2. So our clear plans that we have made over the next 3 years is to make sure that the consolidated net debt to EBITDA does not go even close to 2. And that's why we are going to look at phasing the Indian capex so that Bay Minette gets completed in FY28. And then we will be, again, Novelis will be at a cash flow positive and their net debt to EBITDA will come down. So I think it's suffice to say that the balance sheet of Hindalco overall is strong. The India business will be negative net debt, and Novelis will be the only one that will probably touch around 4 and then come down again.
Got it. Final question. Second half of the year is going to be a washout because of the unfortunate fire that we saw in September. But for FY27, Novelis gets closer to around the $500 per ton mark?
So let me first correct. Q3 will be the quarter in Novelis that takes the brunt of the Oswego fire. The mill will start in the first week of December. So Q4, Novelis will come back very strong. And as I said, the underlying business of Novelis is doing quite well. So we expect FY27 to be a very good year for Novelis.
So around $500 per ton, EBITDA.
That will be our target.
All right, $500 per ton EBITDA will be their target. Also explaining the rationale behind the increased capex for the US business, Novelis, that's Hindalco, up around 1%. Remember, post the results and post the announcement that came in, there was a big knock on the stock. We take a short break, come back, get you more on the stocks and individual, in fact, the whole market, which is currently doing extremely well. We haven't had an opportunity to talk about that. The Nifty currently at the high point of trade, led by the Nifty IT.
Come back, keep an eye out on the Nifty. It's headed towards the 20 DMA. So good move is what we're seeing, 120 points. I'll tell you what, the big batsman has not yet come to play because the Nifty Bank is actually underperforming in today's trading session. Has to get its act together to push the Nifty higher. But we'll wrap up on this edition of Chartbusters. Don't go anywhere. The team of Trading Hour comes up next.